All right. Hello, everyone, and welcome to Traders Talk. And this is our second week into the market for 2023. All right. Okay. All right. So just wait a second for those people who joined us. We are slightly late today, and we delayed it for about 5 minutes. Okay. Good. Okay. All right. So, what are we going to speak about today? All right. So, we are going to speak about the market, of course, and this is a show where we talk about the stock market and the stock market, and we are actually also talking more on trading of options and where we basically talk about how we actually trade, what kind of strategies we use, and also during which time we actually deploy which strategy. And of course, if you followed us for our past shows, you would have actually learned quite a lot. And for those who have just joined Traders Talk, all our shows are actually recorded, and it is all in our Facebook page, which is My Style Work Facebook page. Yeah. And of course, we have various other channels, our newsletter, our TikTok channels, our Facebook, and all. You can also go there to actually refer to our past contents. All right. Okay, so today we're going to talk about the fear and greed index, slightly about fear and greed index. Where are we now into the second week of 2023? So far, things have been quite good. The market has actually gone up by about 5% since early start of the 2023, and we are just into the second week, and this is the third week of the market, of course. And of course, many people are actually happy that they see that portfolio increase by, I would say, about 10% at least. Yeah, for those who have been in the market for quite some time. And of course, for those people who have just started to invest into the stock market, of course, you would see your portfolio grow even more than 10%. Yeah, mainly, of course, because you could have actually entered the market where the market has actually bottomed out during this bear rally. Yeah, bear market. Yeah, and of course, if you have actually added positions during those times, or you would have followed some of our earlier sessions where we also talked about entry points for various stocks which we cover in our portfolio, then of course, if you have entered during those times, you would have probably gained more than 10% within this first 2 weeks of the year. And of course, that is always good to see the P&L in green. But of course, what we wanted to actually talk about is also about this fear and greed index, and basically what it is and how we actually use this index to gauge where the market will go based on the market sentiments of the investors and the traders and everybody, which is also measured with this index. Yeah. Okay. Yeah. So let's start off with the S&P 500. Let me share the screen with you guys. Okay, where are we in terms of the market? As I said, we are actually up by about 5%, and basically the market has moved close to the 4,000 points. Yeah, 4,000 points. Let me just put up this chart. Let's see. Okay, something's wrong. Okay, share. Stop this. Share this. Yeah, we are close to breaching the 4,000 level. Yeah, of course, this is again one of the. Let me put my face smaller. Okay, yeah. Okay, so this is where we are for 3,999 actually, not even 4,000, not even 4,000 points. Yeah, and let's see. Yeah. Okay, actually, 4,000. Did we actually reach 4,000? Yes. In fact, last week, this is actually the weekly chart. Let's do the daily chart first. Yeah. This is the daily chart, and of course, last week we actually touched 4,003. 4,003. We actually touched 4,003, and of course, the market closed slightly lower. And ended the week with 3,999. Yeah, so short of about $1 to touch that 4,000 points. Yeah, and of course, if you look at where we are actually trading here, we are basically trading at the top of this channel line here. Yeah, and yeah, so what does it mean? Is that would we continue to actually breach up above? Yeah, and of course, if not, then basically will we actually finish this bear market rally and continue to actually go down lower? Yeah, of course, the most people would actually want it to breach up. Personally, I also want it to actually breach up. Yeah, but of course, it may not be that easy for it to actually move higher. And of course, there are many further resistance points above this level. And of course, you can actually see also here, even if it can go up further, right? I mean, basically, they will actually face headwinds all somewhere around 4,001. Yeah, 4,001, where in the previous past 2 points here, actually 2 points here, it did not manage to actually breach this 4,001 level. You see, went up, come down, went up, come down, big one, and then now it's actually here. And if it goes up above, then there is a further resistance on this level. Yeah, and you can see also back in September itself, more or less, I think this was slightly higher, only slightly higher, 411, yeah, slightly higher, but yet there are many resistance levels above where we are actually right now. Yeah, so of course, this is the rally has since come out from about close to about 3,008 here. Yeah, about 200 points up since the news on the CPI was positive. We had not really positive. I mean, it was expected at 6.5%, right? The CPI inflation rate, right? Then, of course, prior to that, the positive news on the wages. Yeah, the wages increment was actually slightly lower than expected. Then, of course, this actually pushed the market higher, way up till last Friday. Yeah, Thursday was the CPI announcement. Yeah, where we recorded 6.5 as expected. And of course, the inflation rate has actually came down since June, where I think it actually topped at 9.1%. Since June, if not mistaken, and right now we are at 6.5%. Yeah, of course, the target for the Fed is actually to move it to 2%, and of course, I do not think that we will reach 2% so fast. Yeah, so fast. Then, of course, because of that, the Fed policies will continue to be restrictive. Yeah. Because of that, the market can continue to actually trade very choppy. Yeah, very choppy. It can go up, and of course, the next rate hike, which is actually expected, is coming on 1st of February. 1st of February. 1st of February, which is how many more weeks? 1 week, 2 week, 2 more weeks. Actually, 2 more weeks only. Yeah, basically, next week and the following week, 1st of February, which is Wednesday, the next hike release will actually come, and of course, currently they're speaking about 0.25% coming down from the rate of a hike of 0.5%. Yeah. And of course, hopefully that would be the last hike for the year. And after that, basically, we could actually maintain at that rate of 5.1%, if not mistaken, for some time before the Feds continue to actually reduce the rates if the inflation is actually coming down to their expected target. I think they do not expect to actually reach 2%, not even in this year. Hopefully, in next year they could reach this target, but I think it is actually still far away, and because of that, many things can actually still happen in the market. Yeah. Okay, so this is the SPX. Yeah. Of course, if you have actually how to say, personally for me, if you have actually profited right from here to here, if you're actually trading, I would say it's good time to actually take some profits off the table. And if you want to leave some, you can still leave to see if there is possibility of going up further. But if you are already in profit, I would say take some profit off the table from your positions. Yeah. And of course, if you look at the futures, yesterday the futures was open despite the market being closed for Martin Luther King holiday, right? So yesterday futures, I think it is down, and today, if I look at the futures earlier, the futures was also down by MES. Okay, the futures is currently down by about 11 points. Not a lot, 11 points. But of course, that is also how to say, some early indication that this rally could actually how to say, slow down and move the other way to slightly come down a bit. Yeah. Let me change this. Yeah. And of course, the Nasdaq futures is also down about 45 points. Right, 45 points right now. Okay, so watch the charts, and later we will also cover again to actually touch a bit on the fear and greed index, and basically how it actually correlates with the S&P movement, and of course we will end the show with potential trade, which we are also looking to put on. Yeah, we will actually work on trade analysis and trade analysis and trade digest to see if it's actually possible to put on the trade when the market opens later on. Yeah, we can actually share that with you for education purposes as always. Yeah. If you have any questions on the markets or on stocks, do post it on the chat box. Yeah. So for those who are have any questions, and of course on anything, I mean, on the stocks, on strategies, on if you have problems, or if you're stuck in any positions which you actually want to get some help, you can also put it in, and we see how we can actually address those things. So of course, Nasdaq, we can also see that it went at the lows here somewhere towards the end of the year, right, 28th of December, and post that starting of this year itself, right, basically it has actually been quite positive for all the markets, including Nasdaq. Yeah, including Nasdaq. Yeah, you can see that a lot of how to say, component stocks in the Nasdaq, the big component stocks besides Tesla, the big component stocks, I would say they had some upsides early part of the year, and I think the biggest rally on was actually on Amazon. Yeah, on Amazon, where basically they had actually came to the lows at about 82, and basically they are now at about 98. Yeah, 98. Which is about $16, $16 up, $16 up. $16 up is actually quite a lot. It's almost is about 20% up, right? Whereas the market has actually gone up by 5%, and of course, this stock has actually shown some tremendous movement upwards. Yeah, of course, the other stocks like Google have not moved much. It has actually gone up, yeah, from 85 to 92, but of course on a percentage basis, this Amazon would have actually done much better than stocks like Apple. Just let me put this. Yeah, but of course, even with this is what from 84. this Google, right? This Google from 80, 84, 85 to 92. Yeah. The other big caps of Apple. Apple has also gone up from 125 to 134 right now. Yeah. Of course, if you have been following us in our newsletter and also on some of our earlier shows, somewhere in December or in January, you would have actually also caught some of the trades which we have actually done for Apple. Yeah, for Apple, I think we have so far this year closed three trades for Apple, which actually made us quite good profits for all three trades, and these are all bullish directional trade. Yeah, and a lot of times we don't go so much on that. Don't go so much directional, and of course for all these stocks which has actually hit strong supports. Earlier we were talking at the 129 level, right? So for stocks which has reached strong supports, those are the stocks which we tend to actually go on directional plays. Otherwise, basically, we would actually go on credit trades, whether it is credit spreads or whether it is a short put or naked put. And of course, during these volatile times, we have also reduced a lot of the positions on just naked put, single naked put itself. But even the naked put strategies which we actually applied on the stocks has actually been actually so-called directional bias for our naked put, which we actually put on. Even for the trades on Apple, we also put on naked puts combined with calls, yeah, to actually give it a bigger boost, upwards on the trade if the stock price actually moves up. Yet if it doesn't move up, then basically we have somewhat so-called buffer or protection towards the based on the naked put positions which we have actually put on to our strategy. Yeah, and of course, if you want to actually see what kind of strategies which we have actually put on, a combination of naked put plus strict calls, then of course just go to our newsletter which we actually put on our our quick bites newsletter, which basically focus more on trade ideas and trade positions which we actually put on, then we actually share with you all this on our quick bites newsletter. Yeah, and of course we have our weekly options trading newsletter, and of course that side we would actually talk more general about the market, what we actually expect the market to come, or to go at go on the price action it has so far. Yeah, so plenty of resources for you guys to go on besides watching me on this show every Tuesday. Okay, so yeah, so that's on the market, and of course, where do we actually want to go right now? Okay, so let's get back here. So far no questions. Yeah, if you have any questions, just post on. Okay, so what will we do today is actually talk about this fear and greed index, right? Let me show you here. Share screen. Fear and greed index. Okay, I hope you can see. Okay, so this I took this off just now from this CNN, right? Fear and greed index. So basically what they measure is they measure where is the market, based on the market position right now, whether the market participants is having extreme fear, they are neutral, or they are starting to become greedy, or they are actually extremely greedy. Yeah, so the points is basically from 0 all the way to 100. Yep. And of course, currently we are actually at starting to be greedy. Yeah, of course, if you look at the market going up by 5% within the first 2 weeks, 2 weeks, things is a bit rosy. And of course, if you are not in any, how to say, positions or any trades, right, then of course, people would actually start to chase the market, chase the market. Yeah, and of course, when people start to chase the market, then the so-called fear index, it actually moves to the greedy side because after 50, right, it actually starts to be greedy. It starts to be greedy, and below 50, it actually instills fear in the market. Yeah. So okay, so we are at 4,000 level, and of course we actually move from about 3,800 points, right? Since early of the year, we have actually moved about 200 points up, and of course, many of the stocks, like I said, has actually gone up. Even so-called stocks which are quite badly hit, like ARK, right? ARK, right? People who have actually lost a lot of money on these stocks, right? You can see also that for the 2 weeks, for last week, right, it has also gone up. No, this is ARKK. Yeah. So you can see that here is 1 week, right? Okay, so you can also see that this stock has actually gone up by $5, by $5. Yeah. And of course, $5 based on a stock price when it is actually low at 30 is actually quite high. It's almost coming to 20%. Yeah. Yeah, but of course, if you have actually bought up from here, right, that increase is only a small fraction of what what you need to actually cover at 160. Yeah, but of course, I mean, if for those people who, like I said, for those people who have actually started to come into investing or trading, I mean, basically, they would have actually caught on a lot of stocks when they were at their bottoms. I mean, I don't how to say, I don't advise you to actually go into stocks like ARKK. I mean, of course, even though it's actually cheap, right? Of course, anything can happen. It can also go cheaper. Yeah. So of course, for us, we still stick to fundamentally strong companies. Yeah, strong companies which are more resilient to increasing interest rate and whatnot. To actually put it into our investment portfolio. Yeah, but of course, if you are trading the markets, right, then of course it's a different story where you can trade on any stocks, whether it is good stock, bad stocks. You can actually still trade on any stocks, and of course based on certain price action, which the stock has, you can actually do any trade to the upside or even the downside. Okay. So where was I? Okay, yeah, going back to the index, right? Okay, so basically, you guys would have actually also heard of this very common phrase, be greedy when people are fearful, right? Be greedy when people are fearful, and of course be fearful when people are greedy. Okay, so where are we now? Okay, so that's why I said for earlier, right? So if you have already made profits on your trading positions, yeah, I said that take some off the table. Yeah, take some off the table because I am fearful right now because people in the market is starting to become greedy. Yeah, greedy. And of course, if this meter continues to actually go further up, that's the more fear it instills on me. Then I would actually be more careful in going into bullish trades for the stocks, or even for the indexes. Yeah, so that is actually what how we basically generally look at what kind of positions which we actually want to take, or when we would actually take off our positions, also a little bit based on this fear and greed index. Of course, if you look at the other thing, is actually on the price action, right? You also have seen that we are starting to actually touch on levels of resistance and things like the S&P. You can see that we are actually touching on this so-called high of this trend line, right? High of this trend line, and earlier the other potential resistance or headwinds, which will actually come at the 4,100 level for the market. Yeah, but of course, once the market moves the other way, right? Once the market in general moves the other way, it will actually carry on more or less. Highly likely carry on more or less similar directions on individual stocks. Yeah, because what is this S&P 500 made of, right? I mean, basically, it is just made out of 500 of the top companies on the S&P, right? Yeah. So that is basically how it is, right? Okay. So the other one which we actually want to talk about after you have actually seen where we are on the fear and greed index, right? Then basically you actually look at this thing what we call the volatility index, right? Which is basically the index tracking the volatility of the S&P 500. Yeah. So this is the this is the VIX index. And where are we? Where have we actually closed on the VIX last week? Okay, we are actually here. We closed the VIX at this level where we actually almost the lowest level which we experienced for the past 1 year, and we are basically here, right? Yeah, this is basically about 18.34. Yeah, we closed at 18.34, and the last round I can actually just put a trend line here. Yeah, when did we actually touch this 18.34, right? Yeah, when did we actually touch this 18.34? We you can see that we have not reached it here on the November market decline. We have not seen it here. And then no, the market increase, actually not decline. Yeah, and then here we are still about close to 20. Here we did not even touch this. The lowest it went was 1867, and the time we actually breached this was sometime in December 21. December 21 is like one year before, right? It was actually like 1 year before. Okay, and basically after December 21, right? Look at what happened to the market. Okay, to see what happened to the market, we can actually just add in another price chart here, and basically we just add on the S&P, right? S&P 500. Here this is SPX, right? And then we put in new price scale. Okay, so we put in here. Okay, so this orange line, right? This orange line basically is the S&P 500. Okay, and on December last year, December 21, when it actually touched this 18, right? Where you actually touched this 18 line, right? Where were we on the S&P? Okay, we can just put in another vertical line. This was touching. I will take this. We went below. I will take this green one where it actually went all the way to below 16.3, right? 16.3. I will just put in a line here. Okay. So when it actually breached below the current level of 18.3, which is this so-called green candle here, right? S&P was actually trading at 4690. Yeah, 4690. Okay. So and of course, if you look at all the way here, it was actually going up all the way, right? So here was actually 4690. And post that, right? And post that, what had actually happened to the S&P is that I think this was actually the start where they were actually doing the interest in the rate hike, right? The start of the rate hike somewhere in January 21, right? And of course, post that, you can actually see the S&P has actually moved down from 4,006 or 4,700 level, right? It actually came down all the way, started to actually come down. Yeah, come down. we actually entered the bear market right here. Yeah, and look at what actually happened to the VIX when the S&P was actually coming down, right? S&P was actually coming down. So what happened to the VIX was that it actually was below 18, right? Was actually 16 something, right? Actually, VIX started to move up. Yeah, VIX actually started to move up. Yeah, and of course, when VIX move up, then basically you can actually see the market actually comes down. Okay, or the market comes down, the VIX actually moves up. Yeah, whichever lah, whether the chicken comes out first or the egg comes out first. Yeah, so you can see that when the market comes down, then of course the VIX would actually start to move up. Yeah. Okay, so and then you can see that it continued to actually how to say move around the max of about 37 or 38 was actually the top, and of course when VIX goes above 30, then of course you can actually also see that the greed and fear index actually also starts to go down to the level of fear or extreme fear. Yeah, and of course if it goes to the highs like 35 or 38, then most likely we will be actually sitting on the extreme fear side. Yeah, extreme fear side means that the market is actually crashing or has actually come down. Yeah. Okay, so coming to where we are right now, you can actually see that post how to say post December, after December, then on the first 2 weeks of January, right, we can actually see that we were actually coming up from here, moving up on this uptrend, right? Uptrend. And of course, you can actually see that VIX has actually started to continue to come down because market is good now. Market is good, then people are not fearful. People are not fearful, then actually VIX comes down. Yeah. So VIX actually started to come down. And of course, if the market continues to go up, then of course, what can actually happen is VIX would actually continue to actually go down. Yeah, continue to actually go down. Then of course, we also look at historical, right? Historical, at which is actually the lowest level of VIX. Yeah, which is actually the lowest level of VIX. And of course, let's touch this line, right? Let's touch this line. So we are talking about the lowest level which we have actually reached on VIX is about 14. Yeah, and now we are actually at 18. So there's actually a $4 difference. Yeah, $4 difference from there. Yeah, $4 difference from there. So of course, market continue to go down. We may continue to actually come back, go further down. Yeah, and of course, when we were actually looking at the S&P, if you look at the S&P charts, right, you could also see that whatever it is, the current position would actually be also on I would say the stochastic would also be on its high. Yeah? Let's just put this. Let's just do another chart. Let's just put another chart. Products chart. Okay. Actually, why they put this guy here, right? I mean, it's it's a charting thing, right? You should actually put more handsome people there. Okay. This is, yeah, you can see that the stochastic is here. I won't delete all those things later. This is S&P 500, right? Yeah. Okay. So you can see that here you can actually see the stochastic, right? Basically, it is going slightly touching 80. Anything above 80 is actually high. Yeah. Of course, it can continue to actually still go up a bit, but I mean, once it is actually above, then of course the pressure for it to be overbought, right? Overbought, not over, so overbought. When it's overbought, basically there is a tendency for it to release a bit of their momentum to actually come down a bit. Yeah. So watch this stochastic. If it continues to go up a bit, then of course once it actually starts to curve down, then there might be a position where it actually comes down. Yeah. So going back to VIX. Yeah. So going back to VIX. Yeah. So we can have a further downside coming up. But yet, for me personally, I would say the chances for it to actually move slightly up. I mean, it can go up and come down, yeah, because VIX acts according to what the market participants behavior, right? If they have fear, then of course VIX goes up. If they are complacent, they are happy, right? Then of course VIX continue to actually come down. Yeah, but for me, I would say before VIX can actually come down further, there can be days when VIX would actually pop up, go up a bit, before it can actually come down further. Yeah. So likelihood is there is high probability. Like, I mean, trading is also about a probability, right? A probability, and also how you actually view the markets. And of course, even if you look at this so-called opening VIX now, right? It looks as if it is actually going to go up. You can actually see this. This was yesterday, right? Yeah, you can actually see that this green candle, right? Let me go back to 1 day. Yeah, this green candle, which is basically the VIX as at 17 January, which is today, yeah, is already here, yeah, it's already at 20, yeah. So there may be a possibility for it to actually go up a bit, yeah. So because of this, then of course we can actually put in a certain trades to actually capture so-called reversal of the VIX moving moving upwards. Yeah, moving upwards. Like I said, how to say, trading VIX is also not a so-called long-term play. Yeah, it's not a long-term play unless you are actually doing hedging. Unless you are actually doing hedging and you want to actually use VIX to hedge your so-called overall portfolio, then of course you can actually do a so-called longer-term trade using VIX. But in general, I would say personally for me, I won't use VIX for longer-term trades. But if you want to actually play on so-called sharp movements up or sharp movements down, then you can actually do a quick trade on VIX. Yeah, and I can actually show you basically what kind of trade idea which we have in store to actually capture this price right now, and the potential. Our so-called expectation is that VIX would actually spike up slightly, yeah, and that is where we're actually going to trade it. Okay, let's share the trading platform. Let's share the trading platform. Let me put the trading platform up first. Okay. So far, all good. If you're all good, just give me a thumbs up so I know that you guys are all good. I don't know why after 1st of January, the screen started to become smaller. Yeah, in the past, we can actually do a full screen here. Yeah, but not right now. The screen seems to be smaller. Anyway, let's go to our trade platform. Okay, so we are on the Tastyworks platform. If you are not familiar, this is the trading platform by Tastyworks. It is actually quite user-friendly. If you have not got an account here, you can always actually set up one quickly. Yeah. Okay, so if you look here, we are here VIX, yeah, VIX. Okay, and basically VIX is with a 3-star liquidity. Yeah, VIX is means that this is actually a what is that? A liquid instrument, so you can actually get in and out for this quite fast. Yeah, IV is actually at 80%, which basically still which is actually quite high. Yeah, and of course, if you look at what happened to the most of the IVs of the stocks, right? Most of the IVs of the stocks for the past 2 weeks, right? Actually, most of the IV has actually came down. Yeah, if you can actually see, this is from my watch list, right? You can actually see from this watch list, right? The 5-day IV change, right? Basically, this is actually an indicator where it talks about how much has IV changed for the past 5 days. Okay. And if you look at all these stocks which is in my watch list, right? Basically, all the IV have actually come down. Of course, when IV comes down, right, means that the option premiums becomes cheaper. Option premium become cheaper. Yeah. So when option premium become cheaper, if you are trying to sell options, that means get premium out of options, means that the trade positions which you enter would actually generate lower premiums. Yeah, lower premiums. If you are already in a credit position, means that the IV crush, right? That means the IV reducing would actually make the trade more profitable, faster. Yeah. So of course, that would be beneficial if you had already entered into credit trades before this IV drop. But of course, if you have not entered into the trade, then because of this IV drop, right? The premiums which you will get by trading credit trades would actually be lower. Yeah. So of course, because of this, there is actually limited opportunities to actually trade on stocks within our watch list, because you can actually see all these are red, right? All these are actually red. Yeah. All these are actually red. And the greens, the greens in my watch list is only 1 2 3 4 5. Yeah, it's only 5, and you're talking about stocks like Yum, CME, KO, Coca-Cola, Disney, and Pepsi. Yeah. And of course these even that the IV change, that means the increase in the IV is also not that big. Yeah, I mean like positions like CME, which we are currently in, right? Which we are currently in on a bull put spread, right? Which is going to actually expire somewhere in CME, right? Our CME trade will actually expire somewhere in no CME. I think it's 20th January, if not mistaken. Yeah, the expiry period is 20th January, which is this week, right? Yeah, I think we are close to getting max profit on our CME trade. And of course, if you have actually followed us earlier, right? We did also spoke about this stock, CME, right? When the prices was actually trading at about 165 or 166, somewhere around that level. We have also spoken on this stock. And of course, if you have read our news letter, which we actually, our first newsletter for the year, right? The so-called our stock pick for 2023, right? Then of course, CME was also one of the stocks which we spoke of back then. And of course, back then I think the price was also about 160 plus. Yep. So these stocks has actually move up. But of course, if it actually comes back down, then of course, there may be a potential for you to actually get in a long-term position, or even just trade on this stock. Yeah. But of course, since now the premium is actually not that great, then of course it's a bit difficult to do any so-called credit spreads. Yeah. So these stocks I think on high volatility time you can actually trade on this stock. Yeah. Other than that, during normal times, the premium which you actually get out of the stocks is actually not that high, and the liquidity is only to start. Okay. So we actually diverted. Diverted. Yeah. So we were actually talking about premiums, and basically talking about the IV change, right? Yeah. So because the IV change for a lot of stocks has actually came down, right? So credit spreads or credit trades to get premiums is actually not that lucrative or not that favorable. So because of that, then of course we actually changed our so-called position to a bit to the other side, on so-called debit trades. Okay, which basically if you have followed us we rarely do debit trades unless we are very so-called bullish on that trade. Then of course we start to actually do certain debit trades. Also at the same time structured with some credit strategies. Yeah. Okay, so coming back, because premiums are cheap, then of course debit trades will be cheaper. Debit trades will be cheaper, and of course, since debit trades are cheaper, we actually also want to take opportunity on putting on trades according to that. Yeah. So coming back to VIX, what kind of trade which we are actually going to do on VIX? VIX is currently trading at about 20 right now. I think last Friday was actually at 18, right? VIX open yesterday. It might be, yeah, because futures, because this is actually VIX, right? Because futures was actually open yesterday. Anyway, let's see if it is currently at 20, right? Yeah. So see what kind of positions which we can actually do. And of course, if I said we are going on debit trades, and for VIX, we are actually going on to capture any short-term spikes, directional, which means that we actually want it to actually go up. Yeah. And we won't go to too long dated trade, and of course we will actually want to do less than 30 days. Yeah, less than 30 days. Yeah. Okay, you can even do shorter if you want, but let's just put up a trade which is ending on 15th of February. Yeah, 15th of February. Okay, so if you take this trade, it's 28 days, right? And where are we right now, right? We are actually at 20. Then you can actually do just a simple bull call spread. Yeah, bull call spread. Let's put at 21. Yeah, basically what a bull call spread is, you're buying a call at the money. You're buying a call at the money, and of course you are going to sell a call to actually reduce the cost. And where you want to actually sell, actually uh okay, actually 21 for me, 21, right? That means the price at 20 might be a bit high to actually enter into this trade, because when we analyze the trade, it was actually trading at 18, right? But anyway, just for education purposes, right, we will just structure out the trade based on at the money. And of course, if the market continues to rally, because it's not necessary for you to actually enter into the trade immediately today, you can still plan out based on the how to say, the expectation which we actually told you, right? Yeah. When VIX trades low, then of course when the market actually is in fear, then it can actually come down, and when it comes down, VIX can actually go up. Yeah. And there might be a more leeway for the market to continue to go up, yeah, before facing some resistance to actually come down. So of course, when the opportunity, or when the market actually rallies up, that is the opportunity for you to actually enter into this trade. Do not enter into this trade when VIX price has already gone up higher than this level. Do not enter into this trade. Wait for the market to rally and the VIX to actually come down, then enter into this trade. Yep. So for education purposes, I will just show you buy at the money call at the currently is 20, right? Just do it at 21, and then you sell a call at the price which you actually expect VIX to go to. Okay. And anyway, I do not, because we are actually in a short so-called short trade to just capture the spike up of VIX, right? I would not actually do a spread which is actually quite far from the current strike price of the call which you bought. Yeah. So basically, I would just put it to how to say, two strikes, right, above. Two strikes above. That means if you're doing at 21 at the money, then you actually sell at 23. Yeah, just do at 23. So two strikes above. Okay. So at 23, basically this would actually cost, based on the current price here. I mean, it may change when you enter the trade. And for this, basically you're talking about 50 cents, right? So you pay 50 cents for this trade, and basically that is your max loss for this trade uh, uh, on up to expiry, if you keep it up to 15 February, and if the price don't move. Yeah, so this is actually the max loss, and the max gain which you actually can get from the trade is about $150. Yeah. which if you can do this trade, I think it's actually quite good. I mean, to raise 50 to actually get 150 on $2 white spread is actually quite good, which I think because market has not opened, right? That is the reason why you're actually getting this kind of price. But in general, I would think that the price would be higher than 50 cents. Yeah. Anyway, that is the concept. Yeah. Do at the money one and then sell two strikes above, and then basically you should see your so-called max loss towards your max profit ratio to be between 1.5. That means between 1.3 to 1.5, I would say. At the least, you should actually get a risk to reward of between 1.3 to 1.5. If you're actually getting lower, then of course that is actually not a good entry for the trade. Only to do it if you have that kind of ratio. 1.5 is the norm. 1.3 plus minus, if you want to actually go, is still okay. Yeah. Okay, so if you do this, basically your probability of profit is 34%. Yeah, and of course because this is a directional trade, and of course this is also a spread, then of course the probability of profit is actually lower if you keep it to expiry. But anyway, the chances of you to actually get 50% of this 50% profit on this trade is also at 50%. Yeah, so this is again the so-called 50-50 position if you're directional. Okay, so that is actually the trade. Yeah, the trade, and of course if you look at the analysis here, the risk profile, if the price move below the current price, you will actually stay on. You actually make a full loss of 50. Of course, and of course, if it goes above, then of course your profits will actually be capped at 150. But I do not keep this trade until expiry. Yeah. Once you actually get the pop, that means the surge in the movement, right? You can already so-called sell this position out. And of course, the pop, you will actually need to see based on this orange line, right? Where will it be like? So for example, current price is 20, right? Yeah, 20. Yeah, that's why I say the before the market opens, the price of 50 cents is actually too low. But anyway, you say that if the price actually goes up, you follow this orange line, right? If you actually get the pop, say to about here is what 20 22 20 no 20 22 23, right? 23 is the cap, right? So if you go to say 22, that means it goes $2 up, right? Then of course your profit will be here, will be at 50, right? Will be at yeah, $50 here, right? Yeah. No, 20, sorry, 16, you look at the bottom, P and LTHEO, yeah. So that's the line. The other line is actually on the green line, which is the expiry line. So you can actually get, say, $16, so you only invested 25, right? So if you're getting 50% of the profit, which let's say 25 is already good enough, right? Because your return is already 50% of your capital invested of 50, yeah. Yeah. So once you get a pop, exit the trade, and of course, you can go in and out, in and out, in and out of such kind of trades, based on the price movement. Yeah, and because you have this cap of 23, right? The movement will not be as much as a straight call. Will not be as much as a straight call. Yeah. Let me see. Yeah, because if you're doing a straight call, you need to pay 184. Yeah, now you're actually only paying about 50 cents. Yeah. Okay. Okay, so I hope you get what we wanted to share on the VIX and basically also on the fear and greed index, and how we can actually put on positions using this indication and also putting in entries, high probable trades when the VIX is actually trading at its close. Yeah. Okay. So yeah. So this week, I would say not much news would actually come in this week, except for retail sales, and also the PPI, the producer price index, which would actually come in on Thursday, if not mistaken. Thursday. Let me just check. I think it's Thursday. Yeah, Thursday. Thursday. Wednesday, actually. Wednesday 9:30 p.m. Yeah, Wednesday 9:30 p.m. The retail, and also this PPI. Yeah, of course. Yeah, watch out for some volatility during that time. And of course, if the news is not good, if the news is good, then of course price can rally. The price can rally. Then of course VIX could also come down during that time. And of course, probably if that is an opportunity that presents itself, that VIX comes down lower, then that's the time where you can actually also try out the trade which we have actually just explained just now. Yeah. Okay, so have a good trading week. Don't forget to share and like our Trader Talk video. And also, please subscribe to our newsletter. And if you find our newsletter useful, then of course, please share it with more of your friends so that they too can benefit. Yeah. So until next week, all the best for the current trading week.